Hey everyone, welcome back to Corporate Decoder. Today we've got a filing from Asana, and let's just say their latest report might have some interesting revelations about how they're managing their work in the current quarter. Think of it as a peek behind the curtain of how a company that helps others organize their own work is doing itself, especially with guidance updates. If you're interested in companies that help people get things done and want to see how they're doing, stick around. And hey, before we dive in, if this is your first time here, make sure to hit that subscribe button and notification bell so you don't miss any of our deep dives. Also, we've got a fantastic community over on Discord where we break down these filings even further. So join us there, link in the description. Alright, so Asana is a company that helps other businesses manage their projects and workflows. You know, they provide the tools so that teams can collaborate better and get their tasks done. Today we're looking at a current report they filed specifically about their financial results for the most recent quarter and their outlook for the future. This report is dated September 3rd, 2025, and it tells us about how Asana performed up to July 31st of 2025. The big news here is that they've released their financial results and also updated their guidance, which is essentially their forecast for how they expect to perform in the near future. The core of this filing is a press release that Asana put out. Think of this press release as the company's official announcement to the world about their financial health and their expectations. It's where they spill the beans on the numbers. When companies file these reports, it's a legal requirement, and it's also how they communicate important information to investors and the public. Now, while this filing itself doesn't contain the full financial tables in a way we can easily extract here, it references a press release, which undoubtedly does. This press release would contain the critical financial details that we as investors or observers are really here for. We're talking about revenues, costs, profits, and what the company expects to earn going forward. They're giving us a look at how they did in the quarter that ended in July. And importantly, they're also updating what they think they'll achieve in the third quarter and for the entire fiscal year of 2000's management's current view on the business and its future prospects. If their guidance is strong, it usually means they see good things ahead. If it's weaker than expected, well, that can signal challenges are coming. It's important to remember that information in these kinds of press releases, while important, is want to show they are performing well. So our job on Corporate Decoder is to look beyond the headlines and get to the real story. We want to understand what these numbers actually mean for the business, its customers, and its competitors. Unfortunately, this particular filing is more of a notification that they have released their results and guidance, rather than the detailed financial data itself. The detailed financials are in the attached press release as Exhibit 99.1. Without the actual numbers from that press release, it's hard to do a deep dive into specific financial metrics like revenue growth or profit margins. However, the fact that they are updating their guidance is a key event. It suggests that either they have new information about their performance or the market conditions that affects their future outlook. Companies usually only update guidance if it's a significant change, either positive or negative. Let's think about what this means in the broader context of Asana. They operate in the competitive software as a service or SaaS space. In this market, growth and user engagement are key. Investors are always watching to see if the company is acquiring new customers, keeping existing ones happy, and growing its revenue. Guidance updates are a direct signal of how they believe they are doing on these fronts. If they raise guidance, it suggests strong customer adoption and perhaps increasing revenue from existing users. If they lower guidance, it might mean slower customer acquisition, higher churn, or increased costs. The fact that they're filing this in September 2025 means we're looking at results from potentially the second or third quarter of their fiscal year. Companies in the tech sector, especially those focused on productivity and collaboration like Asana, often see shifts in spending patterns throughout the year. Economic conditions, competitive pressures, and the general health of the businesses they serve all play a role. As an investor or even just an interested observer, the most important takeaway from this type of filing is to go and find that press release. That's where the real meat is. You'll want to see year-over-year comparisons for revenue, understand their customer acquisition costs, and look at their profitability metrics. Are they becoming more efficient? Is their revenue growing faster than their expenses? These are the Warren Buffett style questions we like to ask. We also need to consider why they might be updating guidance. Is it a predictable seasonal trend, or is something fundamentally changing in their business or the market? Companies that are growing strongly might increase their guidance as the year progresses. Companies facing headwinds might lower it without the detail. We're only seeing the announcement of the announcement, so to speak. So the key here is Exhibit 99.1. This is the actual announcement that contains all the important financial numbers. If we had access to that document, we would be looking for things like how much revenue did they generate? Did it go up or down compared to the same period last year? What about their net income or profit? Are they losing money or making money? We'd also look at their forward-looking guidance. Did they say they expect to make more money next quarter than people thought or less? For example, if the press release showed revenue grew 20% year over year, that sounds good, but if their expenses grew 30%, then despite more sales, they might be becoming less profitable. That's a crucial distinction. Similarly, if they're guiding for a slight increase in revenue next quarter, but a big jump in operating expenses, that could signal a squeeze on profits. We also want to see how their customer numbers are trending. Are they adding more users to their platform? Are those users spending more? The company's strategy is likely focused on increasing adoption of their platform, potentially through adding new features or targeting new customer segments. Their financial performance will directly reflect how well that strategy is working. If they're hitting their guidance targets or exceeding them, it suggests their strategy is effective and the market is responding well. If they're missing them, it could mean their strategy needs adjustment or that they're facing tougher competition than anticipated. And then we have this Exhibit 104, which is the cover page interactive data file. Think of this as a machine-readable format of the key information on the first page. It helps analysts and systems quickly grab essential details. It's more for the nuts and bolts of data processing than for the narrative story of the company, but it ensures data accuracy and accessibility for financial systems. Now let's pull back and look at the overall picture. Asana is in the business of helping people work better. Their own financial report is a report card on how they are doing. The fact that they are providing updated guidance suggests they are actively managing expectations and providing more clarity to the market. This can be a good sign showing transparency. However, without the actual financial numbers, we can't definitively fear if their performance is strong or weak. The market will react based on the specifics within Exhibit 99. If the guidance is positive, we might expect their stock price to react favorably. If it's negative, we could see a dip. A key risk for companies like Asana is the economic climate. If businesses are cutting costs, they might reduce spending on software tools. Also, the competition in the collaboration and project management software space is fierce, with many players vying for market share. Asana needs to continuously innovate and demonstrate value to stay ahead. In my opinion, Asana operates in a vital sector and its tools can be incredibly beneficial for businesses. However, the success of any SaaS company hinges on consistent growth, efficient operations, and the ability to retain and upsell to its customer base. This filing, by announcing a guidance update, tells us that something is moving the needle, but we need to see the details to know if it's a positive or negative development. The true strength or weakness of Asana's direction will be revealed in the specific numbers of that press release. We'll be keeping a close eye on it. That's our initial decode of this Asana filing. To get the full picture, you absolutely need to review that press release they've attached. What's your take on companies updating their guidance? Does it usually mean good news or bad news in your experience? Let us know in the comments below. And if you found this breakdown helpful, give this video a thumbs up and subscribe for more straight to the point financial analysis. Don't forget to join our Discord community for even more discussions. Thanks for watching and we'll see you in the next one.